annual headline inflation edged down in the last 3 months to July 2014 due to food crop inflation that has averaged minus 5.1% per month. Core inflation averaged 3.3% in the same period, which is below the Bank of Uganda's medium-term target of 5%. In July, annual headline inflation declined 4.3% from 5% in June 2014, largely on account of a decline in food inflation, which fell from 17.2% to 12.9% during the same period. Monthly core inflation has picked up slightly in the past 3 months, mainly as a result of exchange rate depreciation. Latest economic indicators suggest that the domestic economy continues to register favorable performance, and economic growth is projected to be in the range of 5.5 to 6.5% in fiscal year 2014-2015. Over the last 12 months, lending interest rates have declined somewhat, and the private sector credit has picked up strongly. The expansionary financial conditions continue to have the expected effects on the economy, as reflected in the continuing strengthening of private consumption growth. Going forward, I expect that economic growth momentum will be sustained, anchored by domestic demand with additional support from improved external environment. The key uncertainties for the domestic economy continue to be centered on the timing and the extent of the pickup in domestic demand, domestic investment, and the prospects for export demand. It is possible that consumption and investment could be stronger than expected. In addition, there are external risks as the global economic outlook remains a subject of a considerable degree of uncertainty. Prospects for global economic activity in 2014 are weaker than previously anticipated, but are expected to gain momentum in 2015. Financial and commodity prices also remain vulnerable to instability as geopolitical risks remain elevated. The Bank of Uganda macroeconomic forecasts remain unchanged since the last Monetary Policy Committee meeting. Core inflation is forecast to remain in the range of 4 to 5% in the third quarter of 2014, increasing to 5.6% and 6.5% over the next 12 months. Given the assessment, the Bank of Uganda's judgment is that the current monetary policy stance is appropriately configured to foster sustainable growth in demand and inflation outcomes consistent with the medium-term forecast of 5%. Therefore, the Bank of Uganda will maintain the central bank rate CBR at 11% in August-September 2014. The band on the CBR will be maintained at plus or minus 2 percentage points, and the marginal rediscount rate at 3 percentage points on the CBR. Consequently, the rediscount rate and the bank rate for August-September 2014 will remain at 14% and 15% respectively. The Bank of Uganda will continue to assess the evolution of risks to the global and domestic economy and the implication of these risks for the overall outlook of domestic inflation and economic growth. Any future changes in the monetary policy stance will be guided by the implications of domestic and external macroeconomic conditions on the inflation outlook. Signed, Emmanuel Tumusiime-Mutebile, Governor.